Hello and welcome back to a brand new video on the channel. So in today's video, we're going to be jumping into the charts and having a look at understanding where we can find reversal points within the market. So there's three key things that we need to consider when we're looking at catching reversal moves, so backside moves within a trading market. So we're going to start on Euro USD. We're looking at the day of the week, what external liquidity has been taken, and if we can see an FEG change in delivery on the 1 hour and 15-minute time frame. So there was been a good example on Euro USD. We had this nice daily order block partnered up with this daily high, so we can say this is a external piece of liquidity within here, and as you can see, we've taken that out with this wick, and this is now our new external liquidity within the market. Price comes up, price trades into this daily FEG, we see a reaction, and then if you notice what happens, we close below this last daily bullish engulfing candle as a bearish candle. So if we hop down now to the 1 hour time frame, we can start to understand where price started to create a reversal point. So all of this here is chop. We don't want to be trading this, so we can mark this off as some kind of liquidity in price. And as you can see, what price does is we simply come and take our external liquidity across from here right before NFP, and that is what brings us down into this first low down here. And then on the daily time frame, if we can zoom out, we can also see we also had all of this build up, which is clear for people who are obviously going to want to continue long. It's too obvious, so we can understand this now as liquidity for the market to come and drive price into. So we've taken external liquidity, we've then slowed down in price, accumulated one final reach up, and then obviously we're targeting this external liquidity on the backside for EU. So I do expect EU to come down and take these daily lows within here and maybe come down even into the 106. So that is the first example. It's just about understanding what price is doing. Price is building buy-in momentum, and then it manipulates, takes out all the early sellers, and then finally sells off price back into all of these buyers. Stop loss and maybe their entry points mean they've all got taken out of break even. And that is what you see here with this big, large move to the downside. So now what do I expect? I expect we probably run this low before seeing some kind of reversal back into here. You want to be looking on the 15-minute time frame for a change in delivery state. So if I can find a change in delivery state, so delivery state is something like this candle within here. So obviously we've had bearish price movement to the downside. We've created an FEG, price flies through that FEG, that bearish FEG, so we can see price go to the upside after we have that change in delivery. And then finally, we create all this liquidity on the sell side, and price drives down from our external liquidity. So that is the first example. Okay, so with this pair, we obviously have this clear daily high across from here, and this would have been our external liquidity within this scenario. We also have this daily high that price came and reached up into, and then if we drop down to the hourly, we can look at where price decided to reverse from. Okay, as you can see, we have a similar thing. So we have more accumulation in price, creating buyers wanting to get in maybe around these entries within this fair value gap order block for a continued long. But what we can understand is the price engineers these lows ready for news events to take out. So as you can see, we came and took this out down here as our external low. We then took this high as a final stop loss run for any early short sellers within here. So let's say most people would have went short here to try and take out these lows, and then this low down here. What price does, it runs up above the high, and then we see price sell off. So as you can see, you probably could have got an entry here right before NFP on this 15-minute candle, and then you would have made a good few percent, over 80 pips within one candle, and then price obviously runs to our external liquidity. So we have to be very understanding when we see a reversal that there's always going to be maybe a couple days of accumulation within price before we see one last manipulation drive and then a further push down. So now what I expect for GBP/USD is probably a run into this FEG. Today we'll consolidate, create some local highs, people go short early. Tomorrow we'll create high of the week perhaps, and then we'll run out all of these lows. What you can see down here, all of these lows are ready to be taken. So then we can run it back down into a discount. So simply high to low, and as you see, it lines up perfectly with this FEG and this breaker block. So then we can look for further longs if we get the reversal point and a reversal reaction from this entry zone. So that's what I'll be looking for on GBP/USD. One final example of a reversal and how we can spot them. Let's have a look at AUD/USD to be able to spot an example of a reversal point. So AU was obviously in this range for a while. We've created a daily high, created a daily low. We've actually came and smashed this daily low. So once this low and cross from here and this one here, but specifically this one, we can see that's been wiped out. So that low is now being wiped out. And what do we see across here? We have multiple highs the price will probably want to reach into. So what we did then is mark this on our chart across from here, like so. And then we start to see a reaction in price, meaning that this is the accumulation phase. We then have the manipulation phase, and then we'd have another manipulation phase. And now what we see price do is drive out all of these buyers that have been getting in on this trend, as you can see within here. So what we could look for on AU is a potential reversal, so lower time frame reversal this is. So as you can see, Monday is accumulation, a lot of lows being put into the market. So we can probably expect this to reach up into at least 0.66 before seeing a reaction to the downside. This could happen over the next few days. So regarding looking for the change of delivery, here's a nice example of that. So we had one final spike into the high, into these candle wicks over here, lower time frame order block or fair value gap. We've then sold through price, meaning these FEGs here, there has been a change in delivery. We then wait for a reaction back into our fair value gap across from here, and then we could have took a short trade here because we know price is accumulated, we've then manipulated, we've changed in delivery due to the fact we haven't continued higher from this discounted fair value gap order block. We've then came into this FEG and we've sold off in price. So now what's happening, we can see Monday, usually accumulation phase of the week. So we'll probably run up into 0.66 ready for tomorrow, or maybe even Wednesday if perhaps. Regarding reversal points, you always want to be waiting for some kind of accumulation phase. So this would then, now what we're experiencing here will be our manipulation. And then finally, what we can expect is some kind of distribution to the downside to take out the other side of our external liquidity range and our accumulation range. Right now, we're manipulating price back into this high, and then we can experience a nice sell-off on AUD/USD. So that's just been a simple video breaking down how you should look for reverse points. Wait for the accumulation, wait for the manipulation, then get in on the distribution phase of the cycle of 3. So other than that, that has been a quick video on reversal points. If you are interested in joining mentorship or following my exact trades, all the links are in the description, so make sure to go check them out. And other than that, I'll catch you all in the next video.